Welcome back to my channel, and today we have Zomato, and we have the face value of 175, and today we will be doing the fundamental analysis. So let's go ahead. Before going ahead, I want to tell you that you need to be aware of all the scams that are going on Instagram. People are trying to give you assurance that you will make 10%, 20% a day. In a day, that is not possible, and these things everybody knows. Despite of knowing that you are going for that, and you need to be aware of this. Expensive suit offering to a target of large pile of food service value chain. So Zomato Pro is a subscription and which has a membership. In that membership there is exclusive offers and discounts for dine out and food delivery, and it also helps in footfalls and as a loyalty for the said restaurants. So the restaurants which joins with Zomato will avail this facility. So we have Hyperpure. Hyperpure is also another service. Here we have B2B, business to business, restaurant ingredient supply chain, and Zomato hygiene ratings. For Hyperpure we have hygiene ratings, and this, because of hygiene ratings, people will get attracted towards the cleanliness, so it will give a goodwill for these ratings, and people may be get attracted to those particular restaurants which have subscribed to Hyperpure. And then we have recent additions or acquisitions. For acquisitions is the company that they have acquired. So first we have Zomato Pay, and Zomato Pay is wholly payment subsidy which will enable transaction on the platform. Second we have Go First Stake. Go First Stake is approximate 9% stake in online grocery delivery business. And and also Hands on Trade is another company uh, which is in the acquisition of 8.94%, so for approximate 100 billion, and it will expand its on demand delivery offerings. So they have acquired Gophers as well as Hands on Trade. Next we have Fitso is also an acquired company with approximate 50 billion in FY 2021. Primarily, it is engaging in maintenance of sports and fitness facilities. So, Fitso is engaging in the business of maintenance of sports and fitness facilities. So, you have to keep this in mind. And Zomato leadership position. Wait a minute. Zomato's leadership position in the underpenetrated food delivery space will drive healthy revenues. The underpenetrated food delivery service and a CAGR of 36% over FY 21 to FY 30. So Zomato is having a leadership position and which will drive a healthy revenue. So how the revenue will grow 36% by FY 21 to 30? How did I get this? That I will explain to you in the upcoming slides. Now the turnaround in economic units, and this will lead to profitability by FY 2025. By FY 2025, we have done the calculation. We have come to a conclusion that by FY 2025, Zomato will have a bulk of current 2 billion cash balance in intact, so which can drive the company entity into adjacencies and enabling future value creation. See, currently they have 2 billion, but by FY 2025 they will cross this 2 billion mark, and after achieving that, then they will have value creation or other acquisition of new business, or they will go into new businesses. So whether this situation will happen, or either the cash balance will be 1 billion or less than that, uh, it depends on the business or what we can do. See, we cannot predict the market, we can only do calculations and stay prepared for the opportunity. Then we have leading food services online platform and in India, and this is a strong execution. See, what they are trying to say is that Zomato is having a strong execution capacity in online food services. So with the healthy 55% revenue CAGR for Zomato over FY 21 to 24 and 36% CAGR revenue for FY 21 to 30. So 55% of revenue CAGR in FY 21 to 24, and from 21 to 30 the CAGR is 36%. Now, why buy initiation is given, or with premium multiples being justified by superior growth? So the face value that we get is 175, and that implies that EV EV upon sales, what EV upon sales is telling that that we are getting 13 times multiple. 13 times multiple is saying that when the multiple is high, when we divide both of this, that means we have an expectancy that sales will potentially grow, and here we are getting 3 times as a premium, because for any average company it will be 1 time to 3 time max. So here we are getting 13 times maximum multiple. So we can say that there will be potential entry or revenue growth as compared to the peers. So what are the key risks in this is regulatory scrutiny, because delivery charges can go high, or this is also a risk for the company, because the rates and delivery charges earned by food companies is also a risk. Then high driver wage, that the labor law may demand to make more high driver wages, then the cost will also increase. And high competitive intensity, and this is one, high competitive intensity and value destructive acquisitions. Whatever acquisitions they have done, Zomato Pay, Hyperpure, and Goofers, and Hands On Trade, that they may be a failure, or they may lead to reduction in value. So this can also happen. And initiate coverage with a buy rating and fair value of 175. So we ascribe to the valuation of 15 billion, and Zomato's investment in Goofers, that grocery business will come into a benefit for us, and the valuation is also acceptable. 13 times of FY 2024 EV upon adjusted sales, and it is a very available at very significant premium, because we already have Mithun Dimping and Hero Delivery Hero in Europe, and at at 18 billion based DCF is discounted cash flow based method. And our DCF based on the following assumptions. The first assumption that I have taken is for FY 21 to 30, a revenue target of 37%, tapering to 30 to 40 from FY 30 to FY 40. The revenue will be of 13%, and EBITDA. So the EBIT has to break even by FY 2026, because as of now the company is going in negative. So from here onwards we can say that there will be a break even, and then it will scale up to 20%, and from there it will go to 30% by 27%. So this WAC and other 11% and growth rate of 6% is not so important for us. Okay, so we take Swiggy versus Zomato, and India's food delivery sector has also been considering in consolidation. So it is going in consolidation, and we just need a breakout. And see, several competitors such as Uber Eats, Food Panda, Tiny Owls, Kutski have either been acquired or they have shut their business. So we have only Swiggy and Zomato in Asia, and the other, they have been either shut off or they have been acquired by other companies. So Swiggy remains well funded and they have raised funds of 3 billion till date, and Zomato's post IPO cash is of 1.9 billion, and currently we have 2 billion na, in the books. So these two well competitors will deploy cash for food delivery and focusing on market expansion, not for reckless discounting. So by using this cash, they can go for other agencies. Now we have to do a forecast for revenue, and Zomato's revenue to grow by 55% CAGR over FY 20 to 24 estimate. So by 4 years revenue may grow by 55%. Now if revenue grows by 55%, it depends on the people, how the sentiments of the people are related to Zomato. Either the price can double or either the price can move in a steady upward position, because it is said that valuations are the slaves of earnings. So if earnings are growing, then maybe the share price will move. And also 53% CAGR in food delivery monthly transaction units in the same period. So EBITDA margin may likely to remain in negative territory over the next 3 years, with break even by FY 25 estimate, and the company will likely to have a net cash balance of 142 billion by FY 2024. So I don't know if this is achievable, maybe possible. Currently we have 2 billion, and it can be possible if we take 55% CAGR. Then okay, so let's go towards the next. Here we have the TCF base valuation, and you have to look at what is happening this year. So this year we have growth of negative 23%, and if you look at this column here, then here we have a improvement, and this is E means what? Estimate is calculated by that 37%, whatever I have told you with this one, and after that 13% onwards from FY 35 onwards. So this can be achievable. Growth 3% 70, and free cash flows will be positive here from 2025. So from 2025 we will have a cash flow of 1005, and this is given in million. So 1550 million we will have a free cash flow. As per the calculation I have taken 37%, so this is calculated with that. So here we have Zomato revenue breakup. So this is how they have increased from the past 6 years, and from 2015 to 21. So this is how the revenue has been progressing. This dark black color is the food delivery, and this is hyper pure classified ads. And you can see that food delivery has been constantly increasing. And 2020 they have also done the uh, kept the cost low. And also, if they have kept the cost low, they have done the expenditure also low, so the profits were also less. So trading at premium to global players, strong execution and immense potential for exploring adjacencies. So Zomato is trading at 11 times of FY 2024 of EV adjusted sales at premium. Then we have to note that there is a divergence in valuation multiples, and this is due to a premium for food delivery companies because there are less delivery companies that are listed. And also we expect Zomato to deliver 57% CAGR in food delivery business and 63% CAGR in hyperpure, and CAGR in other businesses over FY 21 to 24 estimate. And however, I am also a being, and I also personally feel that whatever calculations I do sometimes may be achievable, sometimes may not be achievable, because it depends on the people how they are reacting to the price. Sometimes the valuations are good, and even if I do calculations and do the future forecasting of this, then even if people don't react to the price and the price doesn't push itself up, still the company is very good for shareholders. Okay, so what are the risks that are been involved? The key risk is COVID related disruptions, and also competition and higher wage cost. So first is like public health threat like COVID-19, and this could dampen the demand and operation. And second one, increase competition and inability to change to customer preference, higher wages of food delivery partners, and inaccurate social media coverage. They have to put good ads. And technological obsolescence risk, they have to cope up with the new technology also. Now we have to look at page number 28, 29, and page number 30. So we have the income statement, and in the income statement what we have to check is EBIT. We have to check this EBIT. Over here we see that it is improving but still in negative. Now if we go further down, uh, if we consider 2021 and 2024 reported profit after tax, here we have negative 11,000, and in 2024 we have positive. So this is what we are expecting, and this is what we want. So when we will be turning the profits into positive, that time the share price will pick. Let's go further. Now here we come to the balance sheet, and here we see the shareholders funds. The shareholders funds are increasing, or we can also check the reserves and surplus. The reserves and surplus belong to the shareholders. So if we compare this figure to this figure, it is almost doubled. So this is what we want. And if we look at the borrowings, long term borrowings, previously there was long term borrowings. Now after the IPO or the issue of shares, now they have disappeared. Still in 2021 we have short term borrowings. This have become nil uh, in the further coming years. Then we have cash flow. For cash flow, cash generated from operations, in 2021 is negative, and for 2024 estimate for the projections we are getting positive cash flow from operations. That's a good sign. And cash generated from investing activities, here we have a negative cash flow, and in 2024 also we have a negative cash flow. That means we are still going to invest in other businesses rather than the sole business. And if we go further down, then we come to cash and cash equivalent at the end of the year. At the end of the year, and we compare with 2021, then it is almost kind of a three times. It has grown by three times. So I think this is how Zomato is going to perform in the upcoming years, and we will hope that it will do better. And so this is all I have to say about Zomato. Thank you. Please like, share, and subscribe. And this is only for education purpose.